The largest official real estate developer in China, Country Garden, is now in trouble too. So earlier this week, Country Garden has had a lot of trouble. Their stock prices in Hong Kong were down 8% in a day. Their dollar bonds, as you can see there with the chart on your screen from Bloomberg, this article was in Bloomberg a few days ago. The Wall Street Journal also had a similar article out in the last few days talking about how Country Garden has a debt problem as well. Although off-balance sheet and hedge fund analyst Emma Mollman, in an interview I did with her, I think back in September, so you can look it up in the archives of my YouTube channel. I also highly recommend going and listening to the interview I did with hedge fund superstar Kyle Bass, which was in November, talking about Chinese real estate developers and the problems there. So the Chinese government and the People's Bank of China has managed to drag this out, the problems with Evergrande, the problems with the real estate developers, and the policy decisions for how they've decided to deal with this are very, very similar to what the Federal Reserve Bank decided to do in 2008 and 2009 with the US's housing crisis. There are similarities and there are also differences. So off balance sheet, Evergrande, and Emma Mollman was talking about this in the interview back in September. Evergrande probably has even worse toxic sausage and liabilities. Emma was talking about enormous amounts of accounting fraud that Evergrande was doing for hundreds of billions of dollars. What they were doing is they would have these holding companies set up in the Caribbean, and Evergrande would only own 49% of these joint ventures or JVs. And Evergrande would not declare all of this extra debt and liabilities or whatever else is in the holding company, probably a lot of toxic sausage garbage. Hopefully not as bad as what the large banks had in 2008 and 2009 here in the US. But they did not have to declare this stuff on their balance sheet officially. So she called it accounting fraud. Other people might argue with that, but I would call it accounting fraud. At the very least, it's aggressive accounting. And Country Garden's having similar problems. What the People's Bank of China, which is China's central bank, has decided to do about all of this stuff is they've drawn this out for months. So a lot of this stuff actually started in summer, so June, July, August, September of 2021. And because of money printing, because of bailouts, they've managed to drag this out longer and longer and longer while real estate prices in China are falling in many major cities. So not everyone is getting a bailout. The Chinese government and China's central bank are picking out winners and losers. Chinese state-owned enterprise banks, so the large banks that have a lot of these bad real estate loans, the People's Bank of China is printing. They're doing easing. They're doing quantitative easing and bailouts. They've lowered the reserve requirement ratio. I believe they did it last month or the month before. It's in the last 2 months. They've lowered the bank reserve requirement ratios to make the banks look more solvent. They say it's to free up credit in the system. It's not true. The Chinese banking system and the shadow banking system already has way too much credit available that is not being serviced with cash flow, that has a dollar-denominated debt problem. The reason, and the Federal Reserve Bank did this also in 2008, 2009, when you lower reserve requirement ratios that much, you are doing it solely to make the banks appear solvent. So the People's Bank of China, China's central bank, is doing bailouts, is doing QE, and has lowered the reserve requirement ratios recently. I have some other articles there on your screen, including a warning from Xi talking about how if the Federal Reserve Bank raises interest rates, that will hurt the Chinese economy. It will probably accelerate bankruptcies and defaults with Chinese real estate developers and potentially even Chinese banks that have too much dollar-denominated debt outstanding, and other Chinese corporations as well. So Country Garden, they are the largest in terms of actually building houses, but I think, in my opinion, talking with experts like Emma Mollman and others, Evergrande had even worse debt problems and other toxic sausage and other accounting fraud hidden off balance sheet. So Evergrande's problem and the counterparties in the banks may have been even larger than Country Garden. But what the Chinese government and China's central bank, the People's Bank of China, has decided to do is to pick winners and losers. So if you're a real estate investor in China and you have a mortgage and your property prices are falling, you're shit out of luck. You're going to be upside down in your mortgage. I don't think they're going to allow strategic defaults similar to what happened in the US in 2007, 8, and 9, where there was strategic defaults. If you're a Chinese state-owned enterprise bank, you're going to get a bailout. It seems to me, especially for foreign bondholders holding these dollar bonds of these Chinese real estate developers, they're going to be the ones screwed over. It seems to me, in my opinion, at least for now, that China is going to allow bankruptcy and some type of restructuring of basically all of the Chinese real estate developers. So the winners and losers, the losers are going to be the regular Chinese person that had real estate investments, that had the mindset that real estate prices only go up. And unfortunately, and we knew this was eventually going to be the case, because real estate prices, stock prices, they don't always go up, especially without a major correction or crash, at least for a little while, even in this world of runaway, irresponsible, crazy central bankers with their policies. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis, and I'm providing these short little free videos, there are now over 190 articles and audio podcasts behind the paywall, all for only $5 a month. I think it is one of the best deals out there. That is exclusive for patrons. And just in the last 26 or so weeks, there are now 39 new articles and audio podcasts, including 8 new articles and audio podcasts out in the last 5 weeks. It's a lot of interesting content behind the paywall. It's been a couple uranium market update audio podcasts, and hopefully in the next week or two, I'll have some additional content out. So if I could wrap up this short little video very quickly, it was very, very predictable that Country Garden was eventually going to have a problem. The spin by the Chinese government, the spin by a lot of pro-China people was that Country Garden was more responsible with its real estate development and its loans. Unfortunately, from a lot of stories I've heard, seen people posting anecdotal stories, real estate investors in China, ones that left China, it seems across the board, these Chinese real estate developers were committing accounting fraud. They were building on speculation. They were doing these pre-sale scams. They were bribing politicians and bureaucrats. And there's been trillions in misallocated capital, waste, fraud, corruption, and abuse in infrastructure, and especially in residential property real estate speculation, I would say. It was called an investment, but I would call it really speculation in China. Real estate prices could not go up for forever. And now you're finally starting to see the house of cards come down. But the People's Bank of China, China's central bank, is protecting the banks for now. They've done a number of different policies to try to protect the banks, to try to insulate these Chinese state-owned enterprise banks from going bankrupt and creating wide-scale contagion, similar to what happened in the US in 2008 and 2009. China's central bank seems to have learned from what the Federal Reserve Bank did, and they're doing a lot of the similar policies to try to prevent wide-scale contagion of the banks. Now, there's not as many trillions. There's not the trillions in derivatives exposure tied to all this stuff that the U.S. banks had and the European banks had connected to U.S. real estate prices back then. But China's shadow banking system is still very large. If the amount of real estate development in China slows down a lot or stops, or if real estate prices continue to fall, the amount of investment options for the average Chinese person will be a lot less. And this is why really since the beginning of 2021, and it's accelerated every couple months, physical gold demand, physical silver demand, physical platinum demand are increasing so much in China. People are putting their savings into precious metals now for a lot of different reasons. Because the Chinese government is printing enormous amounts of money, because almost every day it seems there are new bad stories coming out, whether that's on the China Insights YouTube channel about record amounts of unemployment in China, record amounts of stagflation with food and energy, shortages of key goods, energy and electricity shortages, all these problems. And this stagflation, this unemployment that's happening in China, and this is why you're not going to see a lot of deflation in the West, because the cost of goods sold on so many items in China, if you can get the items in China, the cost of goods sold with all the different input costs is up so much. And that's creating much higher cost pressures for so many goods here in the West. This is kind of shocking considering what's been happening lately to lumber prices with a big rally. Copper prices are still doing very, very well. There's been some shortages of base metal price. But if real estate construction in China, especially for residential real estate, if it starts to slow down even more or collapses, because Chinese real estate prices are collapsing, falling even more, and Chinese banks won't give out as many real estate loans, then you could potentially see a pretty nasty correction in the next 6 to 12 months in base metals. It would probably only be temporary though, because I think long term there are serious supply issues for a lot of base metals. You're seeing the research come out that if demand does not drastically drop, that there's going to be big shortages for a lot of these commodities, whether that's food, energy, or base metals. So I'm not surprised at all about what's happening with Country Garden. I'm not surprised at all what the People's Bank of China, China's central bank, is doing to try to slow this down or counter it. They've delayed things out for a very, very long time, really since summer of 2021. So this has been going on for over 6 months. They've delayed things out further. Any potential wide-scale crisis and bank failures, all these policies, these rules changes, all these things are being done to protect the banks inside of China, the large state-owned enterprise banks. But there is still really, really bad stagflation in China, really, really bad unemployment because there's bad policy, bad central planning, misallocation of capital for trillions of dollars, and too much debt in China. So there's money printing, currency creation, and too much debt. And that's how stagflation is created, by bad policy. Trillions and trillions of misallocated capital by central bankers, politicians, and bureaucrats. And then also bad policy with taxes, rules, regulations, red tape. Look at all the different industries that have been affected in the last 8 months in China by policy changes, whether that's private sector education. And so many of these different industries are now firing 10, 20, 30, 40% of their workforces in a very short amount of time. And there's still stagflation, despite wide-scale unemployment, because to counter that, the Chinese government is still printing to try to help the banks. And then there's supply-side problems with commodities.